All right. Good evening, good morning, good afternoon, wherever you are on this beautiful planet. Welcome to the Inner Circle Live Agent Session. I'm your host for tonight's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And we're definitely happy and grateful for all of you being here with us this evening as we take a look at the technicals and the fundamentals to see what we could take advantage of in this super awesome Forex market. So without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes, and let's make sure, as always, we participate and engage. If everybody is all set and ready to go, please drop me a one in the chat so we can get this session off and running. All right, I got the ones coming in. All right, so everybody has full functionality. We are ready to go. Ryan, good evening, sir. How are you?
Good evening, bro. I'm doing well, man. How about yourself?
Oh, man, I'm doing pretty good. Can't complain. It was a lovely day until it dropped like 15 degrees in an hour.
Yeah, man. It's
I don't know
definitely
what that was.
definitely chilly. It's
Yeah,
supposed to get a little bit cooler too.
okay, yeah, because caught me slipping. I was in t-shirt and shorts out of the softball game, so
Ooh,
yeah.
gotta
Yep.
end on a diamond.
Oh, I know. So yeah, it was quite interesting, but hey, it's all good. Glad to be here. So with that being said, let's jump on over, right? Take a look at the calendar for Tuesday, May 16th at 2 a.m. We had the claimant count come in for the UK. It came in at 46.7 on the forecast, 31.2. So that number missed forecast, right? So for people that know what that is, right? We're talking about the employment situation. It's the number of people claiming unemployment related benefits during the previous month. Right? It's usually the first gauge from the previous month when it comes to the employment numbers. So you can see actual less than forecast is good for the currency. And we know that in the UK, well, everybody's been going 50, 75 basis points, pretty aggressive. The UK has kind of just been, lugging around 25 basis points here and there, but we can see that that number came through a missed forecast. So we'll see what it looks like going forward in regards to what that signals for the Bank of England in regards to tackling inflation. So that's going to be quite interesting to watch going forward. See if it's just a one-off. See, got to read in greater detail exactly what sectors were taking a hit there in regards to those numbers. So we'll continue to watch that. That was quite interesting this morning. Then we've got the CAD, right? We got the CPI inflation creeped up a little bit. As a matter of fact, it was on the front page of Trading Economics, but since moved on. I have to find that article. But we know that Canada they put a pause on rates. They were one of the first to do it. And just to evaluate the lagging effects of the interest rate hikes that they had put in place so far. And so we know that they paused again recently. And so it came through a little bit higher. So the forecast was 0.5%. It came through at 0.7. Again, you really need to read the details on that. Even the trend mean CPI came through at 4.2 and 4.1. So core retail sales in the United States missed there, right? So we see core retail sales month over month came in at 0.4%, forecast of 0.5. Retail sales overall month over month came in at 0.4%, forecast of 0.8. Right, so we'll continue to monitor that. Right, a lot of mixed data going back and forth, but that's what occurred today. ECB President Lagarde spoke today as well. There's no data on that, so I'm gonna have to find out to see exactly what topic she was covering today. It wasn't highlighted as a red, gold, or orange, but we'll continue to watch that. And then right here at 9:30 for Australia, we're going to have some wage price index QRBQ come through. So we'll see what that comes out to be. So for people who don't know what that is, a change in the price businesses and governments pay for labor, excluding bonuses, actual greater than forecast is good for the currency. Right? So it's a leading indicator of consumer inflation, right? So a lot of these data sets are always around inflation. Okay. Businesses pay more for labor, The higher costs are usually passed on to the consumer. That makes sense. Makes perfect sense. So we'll see what happens with that at 9:30. And we've got Governor Bailey speaking tomorrow at 5:50. So we got that 2 a.m. report that came out earlier this morning for the claimant count. It'll be interesting to see what he has to say tomorrow morning, 5:50 a.m. So that's it in the market. Ryan, anything that you picked up on today? They wasn't too busy.
It wasn't too busy. No, I did watch an interview with Fed the president out of Richmond,
Richmond Fed.
interview.
Okay.
Yeah, Richmond Fed, and his sentiment is he's still not convinced that we're done with the inflation scenario, and could definitely see some more hikes coming. His concern is if they pause, then inflation could spike up. He said they've done a lot of research on the 70s and the situations that happened in the 70s, and they ultimately paused, and then inflation continued to rise, and it was an even worse situation. So his sentiment is that we could see some more hikes from the Fed. So that was just one of the interviews that I watched.
Yeah, I speaking of Fed chairman, I saw head of the Atlanta Fed. It was at Bostic. He cast doubts on the possibility of rate cuts this year. He said even if there is a recession, he putting doubts on it. So that inflation monster is crucial. You gotta get it back in the bottle.
Yep, absolutely. And that Barkin had a similar tone.
Okay.
Similar tone.
Yeah. So we'll see how it goes. I mean, especially we see it can happen. We see Canada, right? The number creep back up on them. So I kind of understand where they're coming from. So we'll see what happens moving forward. So let's go move over and take a look at the thank you, sir. Appreciate it. Let's move over and take a look at the DXY, and we can see, right, just still right moving along, right? So here's our crown setup off the weekly that we've been following. Then we're kind of just moving sideways, range, and we're right back up to the top of that range, pretty much. So we've got, what was this high? What was that? 12,866, 12,856. So what's this? 12,858. So not quite at that high in that range. Okay, right there. So we'll continue to watch the dollar, see how it performs. I had a bullish week last week. So far this week, kind of tailing off a little bit, but we'll continue to watch what happens with the dollar. Any questions on anything regarding the fundamentals? All right. Well, hey, great job, posting in the Discord. Some of you are posting your charts and things like that. I know I saw Carolyn today. We had some other folks too. Keep up the good work. Everybody, hey, repetition is the mother of all skill. All right. That's what we're about, helping people to become consistently profitable traders. It is a simple mission. Right? So that's what we stand by. So let me move on. Let's go into, I want to go over something just quickly. Right? I always think that it's good to review, just as a reminder to try to keep things simple. So I'll just stay on this chart. Okay. We'll go to the, all right. We'll go to the 4, and I will take this out for now. In fact, I'll just clear it. Okay. We get a lot of questions, a lot of people inboxing us, different concepts and things like that. And it's important that you go through that discovery phase, right? You're gonna see a lot of things. But just to review what we do, okay? Because I promise you, everything else that's out there really kind of just falls in between what we do. Okay. So we trade waves. It's very, very simple. Okay. Very, very simple. We use the fibs to measure those waves. Okay. We believe that the market moves in ABCD waves, like so. Okay. Market comes off support, moves to resistance. Okay. We get a pullback. If this is a low, okay, 5 candle combination. Okay. We look at those swing lows and those swing highs. So important that we keep things as simple as possible. Okay. That's what we look for. Right. This is a low of support. Okay. This is your 5 candle combination. It's a swing. Okay. We got 1, 2 to the left, 1, 2 to the right. That's higher than our center candle. This is your foundation for support. Okay. Everybody got that? Drop me a 1 in the chat. Okay, good. Awesome. All right. This is your swing high. Okay. All right. 1, 2 to the left, 1, 2 to the right. That's lower than your center candle high. That's a swing high. This is the bedrock of what we do. This is the very foundation of support and resistance. Okay. This is where all things start. We're never going to change that. It is what it is. Right? Everybody get that? Drop me a 2 in the chat. Right? Just a quick review. Never hurts. Okay. This market moves in swing lows and swing highs. Okay. So at this point here, okay, at this foundation, at this floor, at this level of support, okay, it's going to be a swing low. Okay. As price moves up, it moves up, it forms a swing high. Okay. 2 candles to the left, 2 candles to the right. That's lower than my center candle high. Okay. This is where we move our Fed like that. We look for price to correct. Either straight off of our B boundary, like so. We'll mark our A boundary like this. Okay. This is where it all starts. Okay. It's very, very simple. So when that swing high forms and we have our B boundary, we pull our fib out. We're looking for price to either correct immediately or around that zone. Right? Because if we have a B boundary, that B boundary also represents a level of resistance. So we're either going to look for price to correct immediately off that B boundary and start to take back some of what it gained to the upside. This impulse leg, this AB boundary, we look for price to pull back retrace, take away, right, a percentage of what it gained to the upside in this uptrend. Okay. Once price settles within this AB boundary, okay, and oftentimes we'll look left on a chart, for example, and we'll say past resistance may serve to be future support. So, okay, somewhere in this zone. Okay. So once we get price to settle down, okay, if this A boundary represented a low, if price settles down, and when it settles down, it's going to form a what? Somebody tell me. A swing high or a swing low in the zone? A swing low. Awesome, Brandy. Okay. Because if it respects, for this example, if it's going to respect this level, right, and it settles down and you start to get that fight between the bulls and the bears, it's going to form a swing low. In other words, once that forms, you are now going to have a higher low. Your zone. Okay. Now, what we say is, okay, very simply, as long as price, second, as long as price doesn't take out the A, it has no choice but to go here. Okay. Now, I didn't create this saying. My mentors at MTI, the chief. Right? Got to give your mentors props. Taught me that. As long as price doesn't take out the A, it has no choice but to go your way. In other words, as long as price doesn't take out your major low, and it creates this higher low, right? Somewhere in the zone, you look for price to continue. That can happen in any of these zones, right? We know we have our sweet spots. Okay. 61.8, 786. Why, Benny? Why do you like that? Well, because if price doesn't take out the A, it has no choice but to go our way. I just prefer to put that stop, right? And we know we have certain situations, right? But we're talking about the fundamental nuts and bolts of this thing. Okay. If you were starting this right now today, because if that saying holds true and price doesn't take out the A, it's going to go my way. Okay. Meaning that it could come in and we can have a support level at this 382. Okay. And you may take that shot at that trade high in the zone. Okay. And you say, I'm buying. This bad boy can pull back and move lower. Okay. It can pull back and move lower. But as long as it doesn't take out that A, it has no choice but to go my way. Okay. Everybody follow me on that? Drop me a 3 in the chat. So we're going to talk about swing trading. That's what we're about. Because there are all types of plays. Okay. You might find order blocks. You might learn about smart money concepts. There might be setups that you find in between all of this. Okay. All of that stuff can work. But when I'm just talking about a strictly a swing perspective, I'm using these fibs and I'm using the methodology that we teach. What I'm focused on is for price to come into my sweet spots. Okay. Somebody tell me that's been with us for a while, right? Or maybe just you're new and you just watched the training. In an uptrend, why do we prefer to trade 61/8 or deeper?
I think it gives you a higher risk reward ratio.
Correct. Correct. Absolutely. Great job. Janice, that's why I've been here lately, folks, in order blocks. Smart money concepts. Yep. I think it's no different. I'm thinking it's no different. It's no different. No, it's different. Different ways to enter trades, different ways to find sweet spots. Right? But right, for risk to reward, right, we like those deep corrections and we have to be patient. Okay. If we're gonna play them. We like deep corrections. Can you take a trade off the 50? Absolutely, right? Just what you prefer. Okay. Now, we do it because exactly what you all said, right? Because it gives us history. Okay. Because of where we project the market to move if we hold within this AB boundary. If we come in at that 61/8, okay, we expect the market to move to a 1.618. Here. Okay. Now, adjust this a little bit. So ride it off the 61/8 for now. This is where we expect the market to ultimately end up. Okay. So with this particular setup, we risk 563, 556, whatever it is. Okay. But that TV would be 744, right? It's the diagram, right? We're not actually in the actual market. Okay, right now. It gives us a higher risk to reward ratio utilizing this methodology. Okay, that's why. And the amazing thing is, as long as we divide our risk by our stop loss, no matter what the pair, if we lose, we're going to be out of 1% or whatever it is that we lose. Okay. That enables us to sit steady and know that, hey, I've got to lose 100 trades in a row, 50 trades, 33 trades in a row to blow my account. Okay. And we know if we do what we say we're going to do and we don't argue against our trade plan, that edge is going to play out over time. Okay. We know that if price pushes deeper, and it finds support around your 786 level, we know that we change the projection to a 127 extension. Okay. If we push, okay, like so. If we push to an 8-6 level. Okay. Our stop is already set. Right? This out of the way. We're already set. All we have to do is adjust our take profit level. Right? Okay. So if you plan and you look to enter at a 61.8 level, at a 7.86 level, this market can float wherever it wants to within its AB boundary. All you have to do is adjust your take profit. Okay? So even if I enter at this 61.8 and it pushes deeper, even if I enter at this 7.86 and it pushes deeper to an 8.6, all I have to do is go into my phone or on my computer and adjust that TP level, right? To the 118. That's it. Now, like I say, are there going to be all types of other opportunities, all types of trade strategies, right, that you can get involved in, you know, attempt to utilize while this trade is moving to its target? Absolutely. Okay. You might get stuck in a range. And all of a sudden, you'll have some traders that's looking at the trade in this same area, and they'll say, breakout trader. I trade breakouts. All that's cool. Okay. All that is cool. It's fine and dandy. You may have a trader that says, you know, what do we have? Well, I trade, you know, fair value gaps, all of that stuff. And all I'm saying is that when you're swing trading, you may find all of that stuff in between. But ultimately, that price is going to move to that extension. It just depends on how in and out of the market that you want to be. Does everybody follow me on that? Yes, no?
Yes. Yes.
Okay,
Yes.
awesome. When we trade, okay, this is what we're looking for. We're focused on this primarily. Okay. This. The ins and outs, all of that stuff they can have. Right? This is what we're focused on. If you are, right, you may be a, okay, so we covered it all in this group. You may be a break and retest trader. Okay? That might be your thing. Talked about that before. All we're saying is That's going to happen on the way to the target. So if this is your thing, you play break and retest. You can play it all the way up to that target if that's what you want to do. All we're saying is that once you develop the patience, understand how the market moves in waves, and that eventually it's going to move to that target. So all we're saying is you could really just let that trade just go. Okay. Right? And I know there's some out there that may argue against it. I don't care at all. And we build around that, build the concept and methodology around that. And we become addicted to the process and we live the results. That's what we do. And we get as consistent as we can doing this. That's it. Now, a lot of times it weighs on our patience because we have no controlling timing. It might do this in 3 days. It might do it in a week. It may do it in 2 weeks. But this is what we believe. Okay. When we're swing trading, that's what we do. Okay. If we are in the downtrend, right? It is just the reverse. That's it. If I get a retracement to a 786 and I put my stop above the A, because if it doesn't take out the A, it has no choice but to go my way. And price reverses. It could do whatever it wants to do. Smart money, supply and demand zones, order blocks, whatever, does not matter, right? Go up higher, okay? Does not take out the A. On my particular setup, it has no choice but to go my way. It blocks out all the noise. If I lose the trade, I've already won the battle before I started to calculate numbers. There should be no surprises. Right? But if I get this 786 retracement and it does not take out my A, I expect that move to eventually go to that 127 extension. Period. That's it. So if I come to something like this UJ, and this is my play. Okay. Played this at the 61.8. I played this at the 786. I know that price pushed down to an A6 retracement. So all I'm gonna do, right? Because price didn't take out my A. So there's no reason for me to be out the trade. It didn't take out my A. So yes, initially I'm in drawdown, right? But I'm swing trading. My risk, I've already figured it out. Okay. I didn't go into the game thinking, what can I gain? I'm a money manager. What can I afford to lose? Okay. All right, it's 1%. I'm in the game. I'm gonna let that do its thing. And as long as it doesn't take out the A, it has no choice. Okay. And now I'm gonna manage that trade. I want this target to be hit. Because listen, a lot of times our accounts get whipped around because we're so anxious to get out of trades. When you're swing trading, your trade is gonna move in and out of profit. Okay. And there's gonna be some where sometimes, hey, I didn't eventually adjust my stop like I wanted to. Hey, I didn't win the trade. It is what it is, right? Your edge plays out over time. It's never just about one trade or two trades, okay? But when you let these trades run, you let these trades go to target, that's gonna make up, right? That extra gain is what's gonna make up for when you lose trades, right? So everybody follow me, drop me a 4 in the chat, because that's very, very important. Because you are going to lose, right? So if we continuously leave money on the table, right? And it takes time. I'm saying like, oh, you guys should instantly get this, because I know I did, right? It takes time. But if we're constantly jumping out, oh, I got 10 pips, I got 15 pips. When the trade was supposed to yield you 250 pips, you are going to incur a loss where you lose more than 10 and 15 pips. And it's going to gobble your profit up that you snatched out the market real quick. And you're gonna be like, I'm not winning. I'm not gaining any money. My account's not growing. And oftentimes that's why. Even when you get your risk management down, oh, I'm snatching my money off the table. Oh, I won 10 trades at 10 pips, 3 trades at 10 pips. That's 30 pips. And then I just lost the trade at 40 pips. Negative 10. Okay. Let the trade run. Okay. At least with this methodology, like this is what we teach. A lot of ways to skin a cat. Never hear me knocking anybody else's trade strategy. People put in a lot of work to develop their strategies. It is what it is. You have to find what works for you. So you're never going to hear me talk ill or Ryan talk ill on any other trade strategy that's out there. There's a lot of ways to be successful. We're going to do our best to give you 100% about what we know. All right. That's where we're going to direct all our efforts and our focus. All right. So this trade right now, yep, I was in drawdown. Okay. That 61.8 trade now is up 170 pips. Okay.
Benny, can I ask a question?
Sure.
I'm trying to understand. So are you saying if the market moves in A, B, C, D waves, and if it doesn't take out the A, it has to go my way. Does that mean that it has to reach the D extension? It's just a matter of when?
Just a matter of when.
So it's okay to let it ride because it has to reach the D. Is that it?
That's what I'm looking for, right? Because that's my next area, right? Where if this is what we believe, right? This is my next area where I may get that major correction, right? And we know that things fundamentally in the market happen. We always say, hey, there's no technical structure that will stand in the way of a strong fundamental occurrence, ever, right? Fundamentals drive this thing, right? But when we're talking about this methodology, right? That's exactly what I'm saying. Is that trade's gonna dance? This trade's gonna dance around. It can pull back. It can consolidate for 4 days, right? But what I am looking to do is I'm looking for these trades to hit their target. Okay, their target. Now, we've taught in the past, and it's true, right? I'm going back strictly to the fundamentals. Hey, if you want to take a third off, right? That's cool, right? Half off, that's cool. But do your best to let your positions run to their target ultimately, right? So if you're trading this at $1 and you want to take, 50 cents off the trade, 20 cents off the trade, right? That's cool. But what I'm saying that the ultimate idea, let it play out.
Mm.
You get what I'm saying?
Yep. Thank you.
You're welcome. Let that idea play out, develop that patience, right? And sometimes, I get, because sometimes I know it was my thing. It was when I first came into it, it was like, what can I make this week? What can I make? What am I gonna do this week? Because that's how I got paid, right? On my job. But this is, especially when you're stream trading, this is different. This is a different thought process, a different mentality, right? So, that's just try to let these trades play out, like, right? Try to let these trades, like this trade came into its low right here. Okay, you can see it came to an 8.6. This trade came into its low. When was this? Let me blow this up. Find this candle. That trade came into its low on the 5th, and it hit that D extension somewhere around. See if I can grab the candle. 17th, right? Somewhere around there. So it ran for a while, right? It might have been right here. 16, what is Monday to 70, 60, something like that. Well, this is a 4-hour chart now. So 17, right? It came into it and hit its target, right? So that ran for a while. Look at this one here. Okay. We came into this 61.8 on the 28th. We came into that target. What's that? The 30th, right? So you can see it's the difference sometimes on how they run, but you can see it ultimately went to the target. Here, you didn't really get a correction. Very impulsive. Buyers had control, so we didn't get that deep move. Okay, to come into that sweet spot, it just took off, but it's still an ABCD wave, and now here we are. Okay. So you first started coming into what was this, the third, what's that, the 4, came into this level around the 10th, and now it's moving. It's the 17th. Manage your risk, trade small, let your positions run. You do all the hard work, right? You show up to the weekly ritual, you mark up all your charts, you say, oh, this is my trade idea. Give it a chance. Give it a chance. That's all we're saying. Is give it a chance, right? So if we go and we look at, okay, coming to this is some trade, this pound yen, right? Isn't it amazing, right? The yen crosses similar setups. Okay. But look at what it's doing, right? Look at what it's doing, how it's bouncing around, but it's still within that AB boundary. Okay, it's still within that AB boundary. Look here, right? Look at this last move. That's almost identical price action, right? It's almost identical price action, right? Pattern-driven market. But look at how it came into that 8.6 level, and then it took off. And this is when we talk about the caveats, right? You already mentioned, like, hey, you take trades off to 50 for sure, right? You just have it in your trade plan, right? You pretty much got daily support around this 50% level coming into a double bottom, right? You have to entertain that, right? You want to make sure that you put those caveats in your trade plan. Hey, if I see double bottoms and stuff around major structure, major fib levels, like, yeah, I think I may take a shot at that. And that's cool. You know, that's cool. But now this trade is off and running. So all of this, right? And the reason why I wanted to go over this is because sometimes we can get caught up in all of this madness. But what is it? What's the ultimate goal? What do we want to see price do, right? We want to see price make an ABCD wave, okay, to its target based on the correction that it makes. That's what we want to see. So coming out of the zone, that means that you're out of the zone here. That's 277. I'm trying to get to that D extension at over 650 pips. Right. So then I started to build my case like, well, does it have a shot fundamentally? Yeah. Right. That's a monetary policy divergence between the pound and the yen. We got high inflation out of the UK. We know they got to do something about it. One of the tools they have in their belt is to hike rates. So let's see how it plays out. And that's all you can do. But regardless of how wide my stop is, my risk is going to be the same. This 1%, 2%, 3%, it's going to be the same because of the way you do the math. Okay. So it really keeps it simple. I'm trying to think of one. I think we were looking at the one to the downside, like the Aussie Swiss. And we said, you know, so I'm looking at that. Yeah. So if we move forward, right, how this is coming, how this is moving to the downside, has been moving to the downside, right? So if you ended this in this 61.8 zone, like so, okay. It's good structure, right? We didn't quite get back to the 786, and my stop's above the A. Okay. Right. So far, so good. Okay. That's down, right? That's good movement out of the Aussie Swiss. That's down close to 80 pips. So I expect my projection to be here. Okay. Right. Over 100 pips left on that move. We're going to continue to get that shift to the downside. That I know for a fact, right? If I go down to the 5-minute, if I go down to the 15-minute, all that good stuff, right? I trade it off. Right? I know, right? I got major break of structure, pullbacks, all types of blocks and order block, all types of stuff you're gonna find, right? When you're trading inside of candles. But for the swing methodology that we teach, don't matter. We're just looking for an ABCD wave. We're just looking for an ABCD wave. We got an 80-20 pulled all the way back, right? We're just looking for an ABCD wave for this to finish out. I know it looks crazy, especially as you move down through the lower time frames and you have more candles. But you have to think in your mind, ultimately, where is price trying to go? Where is price trying to go? Where is it? Where are we going to end up? Now we notice, right, that price, right, it's not going straight down. This came up just shot at 786. Yeah. So ultimately, we would love to see this move, right? Continue to correct to the downside. Look at the last move. Okay. Look at how we pull back to this A6. See? Now it's hard to, when prices dancing around and jumping around and prices moving up and up and up in the zone and it's consolidating, it's ranging, right? It's hard to stay patient. Okay, it's hard to stay patient. But ultimately, that move, it made an ABCD wave. Right? So now what we're looking for is, hey, we got to pull back. Just shot at 786. Okay. We look ultimately for a D extension. That doesn't mean that this can't pull back and do all types of crazy stuff. Ultimately, I'm looking for this trade to hit the extension. Okay. That's all I'm saying. That's why I'm trying to make this point tonight, because it's very, very important that once we get the concept down, that we start to work on developing our patience, right? There's no sense in doing all this. Okay. You want to start to let some things play out and get to the target. Okay. Like I said, it's okay to take some money off the table, but you want to leave a percentage of that trade on, right? So you could try to get to your target, right? There's a daily 382 that we're targeting on this CAD yen. Okay. Now, when this trade was doing the dance all down here low at these support levels, didn't seem like it, right? But over time, it's climbing. Okay. So we want to see, right, that CAD continue to move long. Let's see what happens at this level. Okay. They continue to push higher, right? We're almost there. We're getting there on this 1 hour fib. This is the larger overall fib coming off the 4, and then your sub fib's running. But that's the ultimate target right there. There's the daily 382. All right. So some may think like, look at this move. Range bound broke. Ain't no way that's gonna stop. It's gonna keep going. It didn't even come back to test support at 99.17. If it doesn't take out the A, it has no choice but to go your way. If it does take out the A, you're protected. Right. You're protected. What questions do we have? Can the fundamental news affect letting the trade run? Yep. I tend to, when you're in that true mindset of swing trading, because you're using wider stops and things like that, tend to just let them run, right? You have some, now it's gonna come down to you and your trade plan. If you got a big fundamental announcement, some people they'll adjust the stop, or they may reduce their trade, right? They may reduce their trade, take some money off the table. Hey, we got to use fundamental number coming out. That's cool. You know, the key is being aware of those fundamentals. Right? But when you're swing trading, especially like if you're off the 4 hour and things like that, man, it can make a 100 pip move in the opposite direction, but you might already be up 260 pips, and it makes a 100 pip move in the opposite direction. But oftentimes it doesn't change the entirety of the trend. It just creates a correction, you know, which was probably due to happen. It's just making it happen faster. But you guys have seen that, that's been trading for a while. You've seen a market make a huge correction, and then it takes back all of the move and just continues along this trend. You know, so, you know, just stay, you have to be stubborn and steadfast in your trade plan and the methodology that you're trading. You know, that's my whole point is, hey, man, stick to it. Stick to it. So oftentimes we're jumping in and out of these larger swings because we feel like we have to be in the market doing something. And you're just paying commissions and fees and everything else, all those transactions, when you could just let the trade just run. Just let it go. You're welcome, Janice, right? There's opportunities where you can use corrections and pullbacks to add to your position. That's why Ryan always says, hey, just stick your toes in the water at these levels. And then if it gives you opportunities, like if it breaks through, you can use those other ideas, support, breaks and retests and things like that. Those may give you opportunities to add to your position, right? To add to your longer swing trade position. But ultimately, like when you go back, you play around 5, 15-minute time frames, you go back months later, you look like, man, this has moved 700 pips to the upside, 600 pips to the downside. Like, could I have just sat in that trade and rolled it out, and just rolled it out and maybe added and scaled into the trade, So this is a sub that you're like, this is the 4-hour fit built off of that, right? So we see, right, where we've got these upside targets in the zone. So that's where we're looking. That's where we're looking for it to go. All right. And so, and I can't say it enough. Do ideas fail? Yes. Trades break down. We journal. Hey, why do we think it broke down? Sometimes you can't figure it out, right? But we try to figure it out to the best of our ability, and we get better and we get better and we get better. But give your trades time to play out, right? So not even gonna talk about the 80-20 zones or anything like that tonight to go back over those. This is just, hey, I'm trading with the trend that C to D push zone, right? That's what I'm talking about. So you can see even here on this 4-hour fit that we brought down, you can see, right, how it's whipped around. That's a huge correction. You have to remember you're a swing trader. That's over 100 pip correction, but look, it's taking it all back. Took out the high, and now it's trying to move higher. So just let them go. Go exercise. Go shopping. Play with your kids. Enjoy your family. Let those trades swing. Questions before we close out the session? I think sometimes it's good to go back and review. Not yet?
No, sir.
No.
Great
No.
session, bro.
Appreciate it, right? And sometimes, like me and Ryan talk all the time, sometimes we have to remind ourselves, of how powerful these setups are. Just let them go, add to them, right? Look for other setups that come strictly into your zone. Nothing else. Ryan, anything before we close out?
Nothing to follow that, bro.
All righty. Well, hey, this I did have one more thing. Sorry about that, guys. This EuroCAD, I was looking at it earlier. See where it's sitting. It hit that zone, right? See, I've got it off before. We hit that support level, right? We come into the zone, so it's gonna be interesting to see if it wants to make that correction to the upside. All right, so keep an eye on that. That came in right in there, pretty much on the money. Now we've got a loader for him, so continue to watch that EuroCAD and see how that plays out. I'm interested to see it. So, but other than that, that's it. We're moving towards the middle of the week, so we'll probably start to see some things start to shake loose in the market. And hey, 6:30 a.m. Eastern Standard Time for the pre-New York session tomorrow with my awesome partner, Mr. Ryan Carthage. Have a good night, everybody.
Good night.